How anyone can get approved for business financing. All of the big banks and most smaller banks use SBA loans as their primary business funding program. These types of conventional bank loans are very hard to qualify for, as the borrower must qualify per SBA guidelines and the lender's guidelines. SBA loans are also tough to qualify for because the lender and SBA will evaluate all aspects of the business and the business owner for approval. To get approved, all aspects of the business and business owner's personal finances must be near perfect to ever get approved. Let's take a look at all of what is really needed to qualify for an SBA loan. You start applying for an SBA loan by completing their loan application, as you can see here. You will be asked to provide information relating to all government debt you owe. SBA will ask about all other business debts you have, such as outstanding loans and credit lines. Plus, they will ask for information relating to the business owners. You will be asked for personal history information, collateral information, personal balance sheets, financial statements, history of your company, and details on you and business partners' past education. On your application, you will be asked other detailed questions, such as if you have any pending lawsuits. Either as part of the loan application or as a separate document, you will probably be asked to provide some personal background information, including previous addresses, names used, criminal record, educational background, etc. Here, you can see the actual form you will be asked to complete relating to your personal history. Your personal financial statements the SBA request will ask about all of your income, debts, assets, and more. You will also be asked about all stocks, bonds, and outstanding notes. You will need to disclose all real estate you own, unpaid taxes you might have, and all forms of liabilities. Some lenders require evidence of management or business experience, particularly for loans that are intended to be used to start a new business. All loan programs require a sound business plan to be submitted with the loan application. The business plan should include a complete set of projected financial statements, including profit and loss, cash flow, and a balance sheet. Your lender will obtain your personal credit report as part of the application process. However, you should obtain a credit report from all 3 major consumer credit rating agencies before submitting a loan application to the lender. Inaccuracies and blemishes on your credit report can hurt your chances of getting a loan approved. It's critical you try to clear these up before beginning the application process. If you are already in business, you should be prepared to submit a credit report for your business. As with the personal credit report, it is important to review your business's credit report before beginning the application process. Most loan programs require applicants to submit personal and business income tax returns for the previous 3 years. You will be asked to provide a brief history of the business and its challenges, include an explanation of why the SBA loan is needed and how it will help the business. Include a copy of your business lease or a note from your landlord giving terms of proposed lease. If you are purchasing an existing business, you will also need a current balance sheet and P&L statement of business to be purchased, previous 2 years federal income tax returns of the business, proposed bill of sale including terms of sale, asking price with schedule of inventory, machinery and equipment, furniture and fixtures. Many loan programs require owners with more than a 20% stake in your business to submit signed personal financial statements. You may also be required to provide projected financial statements either as part of or separate from your business plan. It is a good idea to have these prepared and ready in case a program for which you are applying requires these documents to be submitted individually. To support your application and demonstrate your ability to repay the loan, prepare and include the following financial statements. Profit and loss, P&L statement. This must be current within 90 days of your application. Also includes supplementary schedules from the last 3 fiscal years. Projected financial statements. Include a detailed one-year projection of income and finances and attain a written explanation as to how you expect to achieve this projection. Many loan programs require 1 year of personal and business bank statements to be submitted as part of a loan package. Depending on a loan's specific requirements, your lender may require you to submit one or more legal documents. Make sure you have the following items in order if applicable: business license and registrations required for you to conduct business, articles of incorporation, copies of contracts you have with any third parties, franchise agreements, commercial leases. Include a list of names and addresses of any subsidiaries and affiliates, including concerns in which you hold a controlling interest and other concerns that may be affiliated by stock ownership, franchise, proposed merger, or otherwise with you. Your original business license or certificate of doing business. If your business is a corporation, stamp your corporate seal on the SBA loan application form. You will also submit your loan application history, which include records of any loans you may have applied for in the past. Collateral requirements vary greatly. Some loan programs do not require collateral. Loans involving higher risk factors for default require substantial collateral. Strong business plans and financial statements can help you avoid putting up collateral. In any case, it is a good idea to prepare a collateral document that describes cost or value of personal or business property that will be used to secure a loan. Questions your lender will ask will include: why are you applying for this loan? How will the loan proceeds be used? What assets need to be purchased and who are your suppliers? What other business debt do you have and who are your creditors? Who are the members of your management team? There is no question that SBA loans are tough to qualify for. This is why, according to the Small Business Lending Index, over 89% of business applications are denied by the big banks. Most business owners struggle to get approved for financing because they and their business aren't perfect as the lenders and SBA require. As a result, most business owners don't get the funding they need and fail, go out of business, shut their doors. Per SBA, lack of access to capital is one of the main reasons for small business failure. Still, there is a solution. There is a lot of capital out there that business owners can obtain, and most of it isn't available through big banks. This massive amount of available financing is available to you based on your business strengths. So as long as you have a strength, you can be approved. This getting money based on your strengths lending strategy is known as the 3 C's of lending. Unlike conventional lenders, which require you have all three, getting money based on your strengths requires you have only one of the following: credit, good personal or business, cash flow, or collateral. Cash flow financing is fairly easy to qualify for. Does the business have existing cash flow proven by bank statements? If yes, you might qualify. Does the business have over $60,000 annually received in credit card sales? If yes, you might qualify. Does the business have over $150,000 annually going through their bank account? If yes, you might qualify. With revenue financing, you can get short-term loan of 6 to 18 months. Loan amounts up to $500,000. Loan amounts equal to 8 to 12% of annual revenue. Rates of 10 to 45%. And get approved with a 520 credit score. With merchant advances, you get short-term loan of 6 to 18 months. Revolving lines of credit available as well as advances. Loan amounts up to $500,000. Merchant loan amounts equal to 1 month's volume. Rates range from 10 to 45% depending on risk. 520 credit scores are accepted. Private money is another great way to get money if you have variable tax returns. With private money, you will need 2 years of positive financials, must show positive sales growth, must have 20% collateral, rates of 8% and higher. Working capital credit lines and loans are available. 650 score or higher is needed to qualify. As you learned earlier, with SBA loans you might qualify, but you will need 2 to 3 years of positive financials. Supply all personal and business documents. Must show positive sales growth. Must have 50% collateral. Rates of 5 to 8%. 10 to 25 years of credit lines available. Good credit required. Collateral-based financing is a great way to secure money just based on your collateral. You can get approved even with bad credit or with no cash flow coming in yet. Acceptable forms of collateral include accounts receivable, stock, bonds, and other securities, cash on hand, inventory, and purchase orders. Other acceptable collateral is equipment, 401k, some real estate, floor plan, book of business. With account receivable financing, 80% of receivables is forwarded. 1 year in business is required. Must be receivables from another business. Rates are very low as 1.25 to 5%. With securities-based lines of credit, you use securities such as stocks and bonds as collateral for a low-interest line of credit. You can get 70 to 90% loan-to-value. Rates as low as 1.6%. This lending comes in the form of a working capital line of credit, and you can get approved even with challenged personal credit. You can also use your existing inventory as collateral to qualify for financing. Minimum inventory loan amount is $150,000. General loan to value is 50%, thus your inventory value would have to be $300,000 plus. To qualify, you can't lump together inventory like office equipment. Rates are normally 2% monthly on the outstanding loan balance. A perfect company for this would be a retail store or factory. You can also get financing to fulfill any outstanding purchase orders you might have. You can secure between $5,000 and $25,000. Get approved for up to 95% of your existing purchase orders. Your supplier is issued a letter of credit and funds are delivered when they confirm shipping your order. You can use your existing equipment as collateral to qualify for financing. This is referred to as equipment sale leaseback. The lender will undervalue equipment by possibly up to 50%. Major equipment only is accepted. Lender won't combine a bunch of small equipment. First and last month's payments required. Loans up to $2 million are available. You can use an existing 401k to qualify for a low-interest line of credit. 401k or IRAs can be used as collateral. Up to 100% financing of 401k value. Rates usually less than 3%. The steps to set up financing include: a new corporation is formed. A retirement plan is created, allowing for investment into the corporation. Funds are rolled over into the new plan. The new plan purchases stock in corporation and holds it. Corporation is debt-free and cash-rich. With the House Reseller Program, you can qualify for financing to buy and rehab investment properties. To get approved, you will need a 660 plus FICO score. Flipping experience is required. You must have cash on hand to put into escrow, even as much as $30,000. You can be approved for up to 65% of after-repaired value. Rates vary from 8% to 18% range. Loan terms are 6 months. If you are a car dealership, you will be happy to know you can use your inventory of automobiles to obtain floor plan financing. This financing comes in the form of a revolving line of credit. When each piece of collateral is sold by the dealer, the loan advance against that piece of collateral is repaid. Commissions from the Book of Business serve as collateral with Book of Business financing for insurance agents. Agents can borrow 2 to 3 times annual renewal commissions. This financing offers a low-interest, long-term loan. Funds can even be used to purchase a new insurance agency. Credit-based financing is the third C, and you can get approved even as a startup for no-doc financing. With good personal credit, you can get unsecured credit cards with a personal guarantor. With good business credit, you can get unsecured credit cards with no personal guarantor. For good personal unsecured credit, you can get approval amounts range from $10,000 to $150,000. The credit doesn't report on your personal reports, only your business reports. Excellent personal credit with open revolving credit is required to qualify. Low inquiries on the consumer report are required to qualify. Approval amounts are equal to current limits. 0 to 25% APR. 0% for 6 to 18 months. 9 to 12% success fees are common. For good business unsecured credit, you can get approval amounts from $10,000 to $50,000. Report to business credit reporting agencies. Takes only 6 months to build a business credit profile to qualify. Personal credit is not used for pre-qualification. Approval amounts are equal to current limits. 0 to 25% APR. 0% for 6 to 18 months. Contact us today to learn more about how anyone can get approved for business financing.